Hello traders, today is the 16th of February. My name is Neville Hornsey, market and YouTrading. And today I'll be taking a look at the Aussie yen. Okay, we can start with the YouTrading.com Forex heat map. We can see here that the euro is actually still seeing some flows into it. Only the Australian dollar and Canadian dollar are stronger. So if we look to the bottom left-hand corner, got a build-up of green here, showing that the commodity pairs are doing well today, and the yen and the Swiss franc are doing worse. So we're sort of seeing flows out of the safe havens into the commodity pairs. The US dollar is also pretty weak, so we could also have looked at the Australian dollar versus the US dollar. Going to the economic calendar, we can see here Chinese CPI year over year came in under expectations at 0.9%. Chinese PPI year over year also came in at 9.1%. So that was below expectations and a good percentage below the previous reading. So currently prices in China coming down. That would be good for exports to the US. So we might even see inflationary pressures in the US start to drop as well. UK CPI year over year obviously came at 5.5%, which was above expectations and the previous reading, but within the sort of constraints of the market analysts that were surveyed, they had a 6.1% as a high mark. So, you know, it's not too far off where it was before, but it is still obviously increasing. Looking at the active trader platform, if we go to the left-hand side, just have a quick look at the sentiment indicator. 71% of traders are trying to go short the Aussie yen. So for me, that's a good reason to be looking for a long. If we do go long, then we can see here that the swing high from the 5th of January, that acted as a supply zone. So this big buying candle here on the 4th of January, sorry, there obviously all those buyers got rolled over the preceding 2 days. So as people were buying, you know, more informed traders were selling. Those guys are still there when it was tested on the 10th of February. So there was definitely some selling pressure up here in the supply zone around the 84, but it's been tested a couple of times now. And if you look to the left, we've got these equal highs as well. So generally above this swing high, I think there's going to be some stops, and that's why I think we're going to go up a little bit higher. If we do sweep the stops and find resistance at the 84.5, we look to the left, we have this big down candle here, then this base sort of range, and then the impulsive move to the downside. So at the low of the 3rd of November, that's where I'm thinking we start to see more selling pressure come in. That's where I want to see a rejection. So if we get a rejection from that level, then we come back down, depending on, you know, the price action between now and then, there might be places where people start to take profits. However, if we sort of see, you know, a downturn in the Australian economy, or, you know, some bearishness come out of the RBA, then I'm looking to this double bottom down here, 78.78. So quite easy to remember. We're looking to see the stops under here get taken. And if we pull back out, there are some areas on a weekly chart which we could come down and test as well. So you're starting to look for the 75 and the 72 sort of level. But for now, it's all good. It's going up. So we're going to look to see if we can get from here all the way up to the 84.5. If we get through the 84.5 without some sort of rejection, obviously 85.5 would be the next place we can look for. We had this big move down. So the sort of topping pattern, if you like, up here, that's where I'll be expected to see more sellers. And obviously if there's bullish sentiment, bullish momentum, bullish price action, then maybe we take out the 86.25. So I'm waiting to sort of see rejections. You know, if I am to go long now, if we buy on the dip here, expecting to sort of sweep these highs, then I'm looking to sort of see how other traders take profits, whether they take it here or slightly higher. Now, the reason for thinking we go slightly higher before a big drop is if I switch this to percentage and then overlay the S&P 500. If I zoom out, you can see here S&P 500 and the Aussie yen rolled over for the COVID-19 pandemic sell-off. So that's all good. And then as we zoom in, we can see the Aussie yen followed the S&P 500 higher as it made higher highs. So did the Aussie yen. As the S&P 500 made swing lows, so did the Aussie yen. Obviously not entirely lockstep, but the general consensus is that the Aussie yen is a good risk on off sort of indicator. Obviously, if commodities are doing well, then Australian dollar does good. If there's a move into safe havens and the market is selling off in terms of equities, then the yen's going to do better. So we're looking to see rising S&P 500, rising Aussie yen, or declining S&P 500, declining Aussie yen. Now, if you look to the S&P 500 here, swing low 1st of December 2021, swing low 25th of January 2022. This is obviously lower. That means there's been a break of market structure. We've had a bear market rally. So we rallied up into sort of 7th of February, and then we had a pullback. So if this was an impulsive move to the downside, which took out this swing low here, then we could be in an ABC type of correction. So you're looking for 3 waves higher. And then we're looking to see if what happened on the 9th to 11th of January acts as resistance again for the S&P 500, or around the 61.8% retracement from the high to this low. So as the S&P 500 goes higher, I'm expecting to see the Aussie yen go higher. Obviously, the sort of volatility, the sort of magnitude of the moves are different, but we're looking to sort of see S&P 500 roll over and then the Aussie yen roll over, or S&P 500 to continue up, and then traders start buying the dip, and then we start to see higher highs, higher lows, and a continuation of a stair stepping higher. If that happens, then the Aussie yen doesn't come back down to test this double bottom here. It just takes out the swing high from the 27th of October, and we go on our merry way to the upside. So for now, looking to buy the dip, looking to target above these swing highs, looking to get back up to the, if I put this back on, 84.5, and then possibly the 85.5 as the first 2 targets. All right, I hope that makes sense. Hope you make some money today. There is FOMC meeting minutes tonight, so the market's probably going to go quieter. Whatever happens, in terms of the way the market perceives the FOMC meeting minutes and the possible rate hikes in March will have an effect on the US dollar, which will then affect commodities. So maybe wait until after that meeting minutes is released to find a buy the dip sort of trade, and then see if we can get back up to these highs up here. All right, take care. I'll speak to you again tomorrow.